What is good, guys? Welcome back to the channel. I hope you're all doing good and having an amazing day. So as you guys know, if you watch my videos, I'm a massive advocate for stock market investing. I believe it's really one of the best things that you can do to make your money work for you and get you one step closer to financial freedom. However, with that being said, in today's video, we're going to be looking at all the negative aspects of investing. And today I've put together a list of 5 challenges that every investor faces, as it's not always smooth sailing, and there are definitely challenges that you need to overcome, especially as a beginner. And depending on your lifestyle, investing just might not be for you. Now, just before we get into it, if you are new around here, welcome to the channel. This really is the place to be for all the most relevant information on UK finance in a manageable form. So if you're not already, make sure you hit that subscribe button down below and click that bell so you never miss a video. And I know it's a bit cheeky asking before the video's even started, but I'd really appreciate it if you guys could smash that like button, as it just helps me out with the YouTube algorithm and basically allows YouTube to share these videos to more people that might find them useful or interesting. And as always, just as a quick disclaimer, this is in no way financial advice. I'm simply just outlining information and giving my honest opinions and thoughts. So always make sure to do your own research and due diligence when it comes to your finances. But with all that being said, let's get into the video. Okay, so the first on the list, and I would say is the biggest downside to investing, is the fact that you're almost certainly going to lose money at some point. A lot of people online especially love to show off their profits, and they seem to want to create this illusion that every single day is profitable and that they're never losing money. Every single investor and trader will have days where they're up and down on their investments, and it's simply just not true that you can get to a level where every trade that you make is profitable. Now, there are different reasons for why people might make losses on their investments. It can be as simple as just picking a bad stock and not doing enough research before putting your money into it. And in cases like that, selling at a loss can actually be the best thing that you can do to get out of the investment before making the loss even more significant. Or it can be a little bit more complex, where emotion gets involved and skews your judgment. So that then brings us on to paper losses, which is actually the most common type of loss that investors face in the stock market. So a paper loss is when you buy some shares at one price, and then during the time period of holding that investment, the price value actually drops to lower than you originally bought it at. But what makes it a paper loss rather than an actual loss is the fact that you never actually sell it, hoping that the price will recover and that you won't actually have to cash in that loss. So paper losses like this are inevitable when it comes to investing in the stock market, and they're simply unavoidable because the markets are constantly fluctuating based on people buying and selling and other world news that might affect the prices. Now, a lot of the time, these paper losses can be completely insignificant to your long-term goal. For example, if you found an investment that you see has the potential to make 50% in return over a longer period of time, are you really going to care if it fluctuates 1 or 2% on a daily basis? But the issue with paper losses is that they're not always easy to stomach, and this is where the emotion can get involved and actually mess with your judgment, allowing you to panic and lose focus of your end goal. And in cases like this, it can be very easy to then turn that paper loss into a genuine loss. Now, honestly, paper losses like these get more and more difficult to deal with when you have more capital invested. So say you invested £100 into a particular stock that overnight had some bad news that dropped the share price by 5%. You'd be down £5, which overall probably wouldn't feel that significant in the great scheme of things. But if you had £100,000 put into that same investment, you'd be down £5,000, which might leave you feeling a bit more uneasy about the situation. So for me, over the last few months, my portfolios have been taking a little bit of a beating due to certain sectors not doing too brilliantly. And some weeks I've seen paper losses of around £10,000 just disappeared from my account. So yeah, over the short term it sucks to see these losses. However, for me, my focus is keeping these investments over the long term. Now, from my experience, usually these losses have been recovered within the next few weeks or months. And I feel if you've done your part in finding an investment that you see long-term value in, there should be no reason to panic. And actually it can just be an opportunity to buy more at those lower prices. But the fact is, if you want to invest in the stock market, you're going to have to be able to deal with these paper losses and actual losses. But it's from gaining experience and having exposure that hopefully you'll be able to tolerate these losses more going into the future. And I think it just emphasises the fact that it's so important to invest with an amount of money that you actually feel comfortable with. So if you're losing sleep over a 5% drop in the market, you're probably investing with too much money. So it might be an idea to scale back with the amount of money you have invested and find something that you feel more comfortable with, as you can always scale the amount of money that you have invested once you feel more confident. Okay, so that brings us on quite nicely to our second point, which is the fact that money is always left on the table, and it's impossible to maximise every single investment opportunity to its full potential. So what I mean by this is that literally no one on the planet can time the market perfectly and buy in at the lowest price and sell at the highest price. Some investors and traders out there genuinely let greed get the better of them, being too focused on trying to maximise every little bit of profit, and this way of thinking can let you miss opportunities altogether, but also turn profits into losses very quickly. This could be through hesitating to buy in at a low price because you want the lowest price, or it could be failing to sell when your investment has peaked, hoping that it will go up even higher. The other side of this is that there are always going to be profitable investment opportunities that you personally aren't partaking in, but you'll see others making profits from. Now, the reason that you're personally not invested could be the fact that you just don't have the money available to invest, or that you simply just don't understand the investment opportunity. And in either case, you shouldn't feel discouraged or jealous of other people making money from these situations, because the fact is you should never invest in something that you don't actually understand yourself. And instead, I believe that you should focus on finding things that you personally see value in, rather than getting distracted from what other people are saying. Okay, so the next big limitation of investing is the fact that your money's tied up. And so as long as your money's invested in something, those funds will be what's called illiquid. So unlike having money in a bank where you can spend and withdraw those funds at any time, with investments that money's actually tied up. So if you need the money or need to withdraw it, you can't necessarily do it straight away, and you'll actually have to sell the investments first. Depending on which brokerage you use, after selling those shares, there can also be delays actually transferring the money out back into your bank account. And sometimes it can take days or even a week to get that money cleared back into your bank account. So for this reason, it might not be sensible to invest money that you might need in the near future. And I think it's always a good idea to have an emergency fund in cash, so hopefully you can use this instead of having to touch your investments. Now honestly, this can be a deal breaker for some, as some people like the flexibility to be able to access their money at any time. However, as investments go, stock market investments are far more liquid than other things out there. For example, property or other physical assets, where you actually have to find a physical buyer, and it can be a very long process to get that thing sold. But with certain investments in the stock market, you can actually sell them within seconds, and then start the process of getting that money withdrawn to your bank account. Now from my experience, for some unknown reason, whenever I've needed to free up some cash and sell some shares, it never seems to be the right time for the market. So it always seems to be a down day or week, and I'm never able to fully maximise profits. However, it shouldn't really be an issue, and the way to rationalise it is hopefully those investments have made significant profits in the past, that small fluctuation when you actually come to sell hopefully won't be an issue. But the fact is, if you are overextended and have too much invested in the stock market and don't have any other free cash anywhere else, it could cause huge problems for you. So if we wind back to last year, just before the pandemic crashed the entire world stock market. So say you had all of your savings invested into the stock market, and basically overnight the total value of that dropped by 30%. But then also at the same time, if you're unlucky enough to lose your job and then had no income coming in, you might then have to sell some of those investments at a loss to try and be able to pay your rent that month, which honestly would not be an ideal situation to be in. So for me, this just stresses the fact that you should never have all of your eggs in one basket, and you should always be prepared to an extent for the worst to happen, and maybe have an emergency fund in cash. Okay, so the next point on the list is the fact that you're going to have to give up some of your time if you want to invest effectively into the stock market. Now the interesting part about this is that the actual time you need to put in does vary massively depending on what investment style you have. So from a basic level, you could actually invest using a do-it-for-me investment platform, where all you're required to do is pick a risk appetite, and they actually choose all the stocks for you. This probably won't use up a lot of your time, but the fact is you're still going to have to spend some time researching and finding a platform that will work for you. Then you have some longer term investors who find winning stocks for themselves, but actually put all of their energy into just finding the stocks that they want to put their money into. And then so over time they can just leave that investment to sort of do its thing fairly passively, and they don't necessarily feel the need to keep track of the markets on a daily, weekly or monthly basis. And then we have traders who can actually spend hours and hours looking over charts and watching the stock market on a daily basis to basically look for opportunities, look for patterns, and try to make some profits from the shorter term volatility, which obviously consumes a lot more of your time. Now most people will probably blur the lines between these strategies and find something that works for them, but the reality is no matter what sort of investment style you have, if you want to be profitable, you're going to have to sacrifice some of your time. So for me, because I work full time, this has sort of shaped my investment strategy, and it makes it impossible for me to be a trader watching the markets all throughout the day. So for this reason, I'm more of a long-term investor. But honestly, no matter what your schedule is, I feel that anyone out there can find an investment strategy that will work for them. Okay, so the final point and big limitation of stock market investing is the fact that no one knows for certain what is going to happen in the future. People can talk a big game and create this illusion that they know exactly what's going to happen and what's going to happen with the stock market in 10 years' time, but the fact is none of us can predict the future. A huge part of the stock market is speculative, and sometimes that speculation alone can cause something to be profitable or not, and sometimes logic just goes out the window, and it doesn't always necessarily make sense. All we can do as investors is analyse the information we have available to the best of our ability and try to gain knowledge from past experiences to make informed decisions. For example, I don't think many people would have expected the stock market to recover so quickly after the pandemic crash. But the fact is it did, and it doesn't necessarily make total logical sense, and that's just the way it is. Also, if we look at the S&P 500 as an example, the S&P 500 is an index made up of the 500 largest trading US companies. and since its inception it's increased in value by between 8 and 10% per year. Do these previous returns tell us that it will continue to do this in the future? Absolutely not, and the returns are by no means guaranteed. But as investors, you just have to do your due diligence and make a judgment as to whether or not you see value in it and would feel comfortable putting your money into it. Okay, so there we have it. That basically covers everything for today, guys. So do I think because of these limitations you should avoid investing in the stock market? Absolutely not. I just want you guys to be able to go in with your eyes open and understand the implications of investing. It's not always easy to overcome these difficulties as a beginner at the beginning of your investment journey. However, in my opinion, I believe the benefits outweigh the limitations. Now, if you did make it this far, thank you so much for watching. And if you did enjoy the video or feel like you learned something new in any way, I'd really appreciate it if you guys could smash that like button, as it does really help me out with the YouTube algorithm and just allows YouTube to share these videos to more people that might find them useful or interesting. And I'd love to know what you guys think about investing down below in the comments. Are some of these points that I've covered things that you struggle with yourself, or do you think there are other downsides to investing that I've missed? So make sure to drop your thoughts down below in the comments. And if you have any questions or feedback for me, I make sure to respond to all comments. And again, if you are new around here, make sure to hit that subscribe button down below and click that bell so you never miss a video. But with all that being said, take it easy guys and keep saving.